Hi, I'm Jenny Brown. Welcome to this week's edition of MFB News. I hope you've been really well. Sorry I wasn't with you last week. I had my first experience of going on a cruise around the Norwegian fjords. Absolutely beautiful. The fjords are just incredible. I'm not sure that cruising is necessarily for me, but I can see what people enjoy about it. So apologies for not being here. Actually, in hindsight, it was a good week to be off. It's been very, very quiet in terms of lender news, market changes, that kind of stuff. So I don't think you missed too much. And what we are going to do is catch you up in terms of what's been happening with interest rates, lenders' products, and also lending criteria changes as well. In terms of broader landlord news, it's been very, very quiet. So this one's going to be a very short, sweet and snappy episode for you. Okay, so let's find out where we are with those pesky swap rates and what's been happening. So as of lunchtime today, and today is Tuesday the 4th or 5th of September, I'm losing track already, we were looking at 5-year swap rates today at 4.749. 1 month ago, they were at 4.73%. So actually no real change there month on month. 2-year swap rates, very, very similar story. So as of today, 2-year swaps are at 5.39%. 1 month ago, they're at 5.410. So pretty much the same. There has been a bit of moving around. Generally, just before I went on holiday, the swap rates were slightly higher. They've eased back down again, so that's really encouraging to see. Now, in terms of dates for your diary, and these are quite important dates if you're interested in what interest rates are going to be doing, inflation data is released on the 20th September, and the next Bank of England base rate meeting is going to be on the 21st September. So you have those both coming up this month. So with swap rates easing off, and I know there's lots and lots of kind of news stories whizzing around about lenders slashing interest rates, all this kind of stuff, actually what's been going on. So there has been in the last week, and particularly yesterday and today as people sort of come back from summer, there has been a fair amount of movement in terms of repricing, fortuitously downwards rather than upwards. Always nice to come to you those kinds of news stories. So first of all, we've seen Keystone Property Finance reduce their 5-year fixed rates, and also they've relaunched their green offering as well. Now, a lot of lenders stepped away from green offerings. So this is where you would get a slightly more preferential interest rate if your property had an EPC rating of between A and C, and therefore the property would be classed as greener. And the lenders really kind of stepped away from offering these slightly preferential rates because lenders' margins have been squeezed so tightly because of their increased cost of funds and trying to keep their pricing down to maintain competitiveness amongst the market, and also sort of looking after their borrowers. So actually it's really nice to see Keystone throw their hat in the ring and be one of the first lenders to come back out with a green offering. Now their green offering actually is EPC rating A and B only, so no C rating for these guys. And Keystone's pricing now is starting from 6.14%. Keystone is a lender, wonderful, very, very kind of commercial orientation here in terms of how they underwrite cases. So a human touches every single case and will underwrite it from start to finish, which means that they can take a view on slightly more complex. Also, their knowledge is great. So things we have found them to be good for, really large incorporation deals would be a very good example of that. So great to see those guys bringing some pricing down. Now we've seen Vida release some new limited edition rates. Sadly, their pricing has gone up. But their rates of limited edition are available for standard properties, HMOs and multi-units. And their pricing on this limited edition range from 6.44%, but it does have a flat arrangement fee of £4,995. So for larger loans where those percentage charge fees can make a really huge difference, actually flat fees can sometimes work out better for you. So that's not bad offering from Vida. Now we've also seen Paragon make reductions to their rates. So always really interesting when Paragon make a reduction in pricing, because in the specialist end of the market, so HMOs, multi-units, limited companies, landlords with really large portfolios, these guys are probably the biggest lender that play in that space. So when they make a pricing change, other lenders really do sort of sit up and take notice. So what have they got for us? So 5-year fixed rates from 5.35% with a 5% fee for standard properties, and from 5.6% with a 5% fee for HMOs and multi-units. I know the fees sound quite eye-watering, but actually if you sort of spread the 5% over 5 years, it's 1% a year. So pricing, sort of the net cost as it were, the actual cost is 6.35% for standard properties, and 6.6% for HMOs and multi-units. Now they've also introduced a range of products which have higher interest rates but flat arrangement fees. And these come down as low as £995 as well. So actually these can be quite competitive again, as we've sort of previously discussed, for those people with larger mortgages. Sometimes those flat arrangement fees can make a real difference in terms of your overall cost of borrowing. They've also brought out some 2-year fixed rates and pricing here from 4.59% with a 5% fee. Now, what's interesting with Paragon, so like I say, they're really great. No maximum number of properties in the background, HMOs of up to 20 rooms, multi-units of up to 20 self-contained units. They can take on some pretty lumpy properties. They can do day one remortgages. They can lend to load companies as well. So loads of great things they are able to bring to you guys as landlords. Aldermore have also released some limited edition products, and these actually, compared to where Aldermore have been pricing, are looking really, really competitive. So they've got 2-year fixed rates from 5.74% with a 3% fee, and these are available both on single mortgage applications, but also their multi-property application offerings. So that's where we take to them more than one property and they mortgage it under one mortgage loan. So you might have 2 or 3 properties or more, even in fact, mortgaged under one single loan account. Some people really like these, some people aren't such a great fan. We've talked about the merits of these in previous videos numerous times, so I won't repeat myself. But ultimately, Aldermore are a great lender. Trading companies, HMOs, multi-units, no maximum number of properties in the background, no minimum income requirement, and they have this multi-property offering when they just put their rates down. So that is really, really positive. MT Finance have dropped rates down by up to 25 basis points. Their pricing now from 6.35. We've seen Foundation Home Loans bring out some limited edition products. Foundations sadly do seem to be struggling on their pricing a bit. They have got some rates which are from 6.99, 5-year fix. The good news here is there are flat arrangement fees of just £1,495. So great to see Foundation bringing things down. Are they market leading? No, they're not, but it's still great to see them making downward movements. Now, we've also seen Virgin add a 7-day limited edition product. So essentially it's available for just 1 week. Now this product's quite nice actually. So first of all, it's 5-year fixed rate. So their 5-year fix on this basis now start from 5.5%. There's a flat arrangement fee of £1,495, free valuation and £700 cash back. So really, really good free mortgages. Now, Virgin are not a specialist lender. So these guys are looking to lend to those people with less than 10 buy-to-let properties. The property has to be owned personally. It can't be an HMO. It can't be a multi-unit. This is really straightforward stuff, but actually encapsulates a really huge chunk of landlords on the list, so not to be sniffed at. Now, what they've also done, incidentally, in addition to bringing out this rather good rate, is they've also introduced a second tier of rental calculation for basic rate taxpayers. Now, this is not uncommon. They're not the first lender to have thought of this, but it's worth mentioning it nonetheless. So when they're doing the rental calculation, bearing in mind this is personal loan borrowing, what we'd expect them to be doing is 145% coverage, assuming a notional interest rate of 6.5%, 7%, whatever it might be. If you're a basic rate taxpayer, then the rental calculation becomes 125% coverage, assuming an interest rate of 6.5%, or whatever that kind of stress rate might be. Now, this means that actually, in very, very short terms, you can borrow more per pound of rental income if you're a basic rate taxpayer with Virgin than you can if you are a high rate taxpayer. And like I say, they're not the first lender to have this rule in place. They're just joining the party, but really good to see them sort of moving away from their standard requirements and looking to assist landlords further at a time when we know that rental calculations are proving to be a real headache for lots of borrowers. Now, we've also seen the Leeds reduce pricing on their buy-to-let and portfolio buy-to-let range. So portfolio buy-to-lets will be landlords with 4 or more mortgage properties. Pricing has come down by up to 0.15%. So their pricing is now from 5.54%. Leeds, again, very much like Virgin, no large portfolios in the background, so no more than 10 individual names only. On this particular, so they have actually moved into the limited company space not that long ago, but this applies to their non-limited company offering. So good to see those guys bring their rates down. And finally, our friends at the Coventry have also made some reductions by up to 28 basis points. So their pricing now from 5.63. Again, maximum of 10 properties in the background, no limited companies, no HMOs, no multi-units, no minimum income requirement. But there is stuff that sits within each of their policies for those lenders we've talked about that are really kind of niche as well. So a wave of rate reductions in the last week, which is really, really encouraging. I suspect we're going to see more of the same over the next couple of weeks as lenders really kind of come back after the summer break. Cost of funds is staying very steady, so they're going to feel more confident about maybe shaving a little bit of interest off their deals just to kind of try and attract new business. I don't think we're in for a tumbling of rates by any stretch of the imagination. There's no signals from the money markets that's looking likely to happen. The other thing that's just worth keeping in mind is in terms of where fixed rates are going to go. Really, for each lender is going to be different because it depends on how they fund their mortgages. So for those lenders who are wholly reliant on the capital markets, which tends to be the more specialist lenders, these guys, it's all about swap rates, all about, because that's the cost of their funds. However, a lot of the clearing banks, so your Santanders, your Coventries, your BM Solutions, all these guys, these are a financial institution who takes savers' money on. So BM Solutions, for those of you who are very eagle-eyed, would be saying, hang on a minute, BM Solutions don't, but actually they're part of the Lloyds banking group who do. So they have savers' money coming in, they have to pay a return on. They may also then use the wholesale markets, the capital markets as well, so swap rates, to kind of blend their borrowing exposure. But the key thing is for those lenders who are lending off of balance sheets, so your clearing banks, the ones who are taking savers' money, these guys' cost of funds has also increased because they're having to pay higher interest rates on savings accounts, and that's going to continue to increase. We're still expecting base rate to go up again later on this month by 0.25%. So their cost of funds is going to increase. So actually for those guys, even though swap rates might be coming down, which is really fantastic news, that's not the whole story for these guys because some of their cost of funds, i.e. what they have to pay savers, is increasing. So in terms of our prediction for where we think fixed rates are likely to go over the next few weeks and months, actually, I think you will see some very small reductions start to come through, but don't expect anything particularly massive, probably till the end of the year now. Now, in terms of lender criteria changes, there's only been one really notable thing that's happened, apart from Virgin changing their rental calculation that we talked about earlier on. And this is that Santander have also changed their rental calculation. Now, Santander are certainly not a lender that I kind of associate with being a buy-to-let lender. They're a residential lender who does a little bit of buy-to-let, but they're not big into it by any stretch of the imagination. Their appetite for buy-to-let is, I would say, really quite limited. And I think the changes I'm going to share with you kind of really just, illustrate that point. So what they have done is said, when they're looking at the rental calculation for how much you can borrow, the first thing is, and this is the good bit, they would ordinarily say if you're a higher rate taxpayer, the rental calculation would be 145% coverage, assuming an interest rate of X%. They're bringing that down from 145 to 140%. So that's really good. So there's a reduction there. So more mortgage borrowing per pound of rental income for high rate taxpayers. However, what they've then done is increase the stress test rate at which they're doing their calculations. So now what it would be is 140%, and if you're taking a 5-year fixed rate, assuming an interest rate of 7.02%, and that has increased from 6.09%. If you're taking a 2 or 3 year fix or even a variable rate, it would be 140%, assuming an interest rate of 8.52, which has increased from 7.59. So they basically increased their stress rate by almost 1% across the board. So slightly disappointing, if I'm honest with you. I'm sure they've got very good reasons, always with these things, when lenders make a change, good or bad actually, they've always got a really good reason for doing so. But I think when we're seeing lenders looking to kind of try and broaden their criteria, try and sort of help landlords and be able to bring more business in because the numbers fit, it's actually quite disappointing to see Santander do something to the negative. And that's really it for this week. Like I say, it is a very, very quiet week. There's not much broader news going on at the moment. The only other thing that I really wanted to share with you is that on the 1st of September, my tenants moved into my house. So I now have, and it's taken over a year, tenants who are paying rent in my buy-to-let property. So amazing. So I feel that kind of concludes my horrific non-paying tenant saga, ending very, very sweetly with me having tenants in place who are now paying their rents. Long may that continue. And by the way, yes, I have taken rent insurance this time around. Thank you so much for joining me. I do hope you found that helpful. As always, if you have any questions, please give us a ring. We'd love to hear from you. 0345 345 6788. Hope you have a really good week. Enjoy this absolutely incredible weather. It's just typical, isn't it? The kids go back to school and the sun comes out. So, but never mind. It's lovely to see it through the office window at least. Look after yourselves, and I'll see you again same time next week.